Folks, welcome to the members stock pick request video. This is different than the best stock pick video, which I normally send out, in that this video, the members stock pick video, there's symbols that our members had suggested that I review. It's one of the benefits of being a member of the Contrarian Trader. We're a personalized service. And the purpose of having that personalized service is to review stocks that our members are interested in, because I am aware of the fact that they're not always interested in the stocks that I'm looking at. And especially when we're in a market correction, I want to be in tune with our members to make sure that if I see a stock that they're looking to possibly get long, that, you know what, maybe they want a second opinion on that trade. Maybe they want to have a second set of eyes on that chart to see whether or not it's a good risk to reward entry point. And that's how we are successful at the Contrarian Trader, by providing that clear, concise feedback. So please, if you're watching this on YouTube, subscribe to my channel. If you're watching this on my website and you're not currently an opt-in email subscriber, please enter your email address. You will not be spammed. We hate spam too. And requests for a review of symbols that you'll see on this chart is really only available to members, so you would need to be a member to the Contrarian Trader. All right, so let's take a look at the first stock up, which is WTER. And, you know, before I even say that, the overall market, let's get it. I'm going to be looking through the lens of, we are in a market correction. All right, it's very, very important to know the macro environment. What environment are we in? This weekend, you had 40 deaths over in the Ukraine. The Ukraine is, in essence, at war with Russia. When you see downed helicopters 2 in one day and then 40 dead the next day, that's not an uprising by civilians. Those are insurgent special forces Russians who are already in the Ukraine. They have been at war for several months now after their invasion of the Crimea. So this is only going to get worse. So understand that there are macro events impacting the market, or that can impact the market, and that there's nothing the Federal Reserve can do about it. So let's get started. First one up is WTER. This is fellow member Kate. Kate, we had that. We went over this a few days ago on the intra-week market wrap, and the question was, how do I like WTER? I was concerned about it then due to the fact that it gapped down. I'm concerned about the stock due to the fact that it is a highly volatile stock in a market where beta is being thrown out. Any stock with a high beta is not in favor right now. So from that perspective, I have my concerns with it. So yes, did we have a dead cat bounce? We sure did. Would I buy it here? No. When would I buy it? I would buy it on a pullback and a retest of this support level. If it pulls back and it puts in a higher low, I might be a buyer of it then. And then I would add to that position on a breakout and a close above this resistance level, and trade it up to a filling of the gap, hopefully at the 30-cent level. But as of right now, I am a bystander on WTER. I know you like it, Kate, so I'll keep an eye on it as well. You've asked me about it before. You asked me about it again for this video, so I'll keep an eye on it for you, and we will address it from time to time. We made a good profit on this trade. We had a great time with the trade, but the market's a beautiful thing. It sends us signals. And when we see key reversals, like you saw back in early April, and then a bearish engulfing a few days later, that's the market telling you, get out. It consolidated, then broke. So beta is not in favor right now. It will be again, but right now beta is not in favor. High volatility is not in favor. So we're going to be bystanders on this one. Commercial Metals Corp, CMC is the symbol. I have to say, I've never heard of this stock before, but the chart looks really good. You can see that we're in a pennant formation and that we're breaking out. We do have resistance back here. These buyers back here, who have been waiting for months for this stock to perform, are going to just be happy to get their money back. So you're going to have a little bit of resistance heading up into this resistance point. After that, it should be clear blue skies if and when it does break out. The RSI is confirming the breakout on price, very positive. Volume is okay. We'd like to see a little bit higher on a breakout. Slow stochastics in an uptrend. Double bottom setup on your Williams percentage R, and you can draw your trend line up. You had a double bottom setup back here. That's a trend. You can draw your trend line up. The oscillators look good. The price action looks good. Volume action, I would like to see a little bit more volume out of, but still, it looks good on this breakout. The only caveat that I will make is that I warned several weeks ago, before this market really began to break down, when we were in our momentum trade phase, because that was what was working for the longest of time. These breakouts had to be bought. The problem is that those breakouts began to fail and roll over and break back down into these consolidation ranges and even lower, below the lower band of those consolidation ranges. So that kind of trade is out of favor right now. So you want to monitor this trade very, very carefully. Ideally, you get 3 consolidation days on a stock like this. It breaks out, pulls back, retests the support level, and then breaks out higher. If you get that, I call that the 3-day rule. If you get that, then you could add to your position. So I wouldn't get overly aggressive, not like we were trading a couple of months ago. I would pull back on the allocation of dollars invested into your momentum trades, because understand, they are out of favor, that type of trade. GORO, this is for Dale. The last one, for CMC, was for fellow member Drew. Sorry I didn't mention you, Drew. This is for fellow member Dale, GORO. We have traded this multiple times. Most of the times we have made a profit. We are trading below the October lows, a very big concern. So would I be a buyer of GORO? No, not yet. Might it bounce off of the support level? Sure, it could happen. I don't like the rising down volume. Let's take a look at the weekly chart. This is going to be in a void right now, Dale. It's breaking down below key support. Where did we close? 4.33, $4.33. We're below critical support, and I believe that there is no historic support below this support level. Let's confirm that. And that would be incorrect. We do have historic support below. Right back here in 08 and 09, we had a pivot point at $4 per share. What does that mean? You could see how $4 per share acted as resistance, and this is a quarterly chart. So it acted as resistance for several quarters, and prior to that, it acted as a support level. So if we pull back and test $4 per share and we flash a bottoming tail, meaning what you saw back here, here, bottoming tails, a sign of support. The market sends us signals. And that's the market signaling to us that we have buyers down here who are willing to support the stock. Now, if $4 per share doesn't hold, we're pulling back to, I would say, at a bare minimum, the mid-threes, as you saw back here, $3.44, or even lower, down to $3 per share. So this is a high beta stock. The gold stocks are not behaving well. As a matter of fact, I'm going to go over this tomorrow on the week ahead commentary. The correlation between the US dollar and gold is just kind of broken right now. I don't know what's going on. So I'm going to do a little bit further analysis on that trade correlation, and we will do a little bit more in-depth analysis. But as it stands right now, Dale, I would hold off on buying GORO. It's a show-me stock. Let it show us it could hold $4 per share, and my bet is that's exactly where we're going, and we'll be there fairly soon. Let's move on to KLIC. This is for Branka. Branka's a fairly new member. KLIC is a really nice stock. It's been behaving really well. It broke out of clear resistance. It was resistance back in October. We pulled back dramatically, and we've rallied back fairly strong. What I like is that we have a lot of volume. Volume, Branka, is a sign of institutional accumulation. Institutions are buying the stock. That's not mom and pop going in and buying 100 shares. These are investment professionals sitting there with their analysis betting that this stock is going to head higher. Now, when you take a look at, and this is what I call multi-period charting, You want to drill out and take a look at your weekly charts whenever you're analyzing a stock and you want to take a look at it from an investment or even a trade perspective. Where is your historic support? Where is your historic resistance? And the weekly charts provide us with a clear picture, a 30,000-foot view. It filters out the noise that the daily chart provides. So on a weekly perspective, the stock is even more bullish. It's a long. We did flash a bit of a topping tail, which is a sign of some sellers above. So I would not go in jumping with both feet looking to buy the stock. I would look for a pullback, nibble on the shares at that point in time, and then add to your position on a closing breakout above last week's highs of $14.85. So good stock from a daily perspective and a weekly perspective. It's just the strategy you want to employ when you're opening up that position. And if you have any further questions on this one, Branka, shoot me an email and I will certainly answer it for you. Ultimate oscillator on weekly chart, good double bottom setup. Again, the volume, really nice. Okay, the next stock up is for Branka again. Her request is for PEIX, which is Pacific Ethanol. This is a daily chart. Now, the daily chart is interesting in that we are trading at the lower band of the pennant formation that's forming. The concern I have is that you have an RSI that continues to weaken. It's breaking down, and sometimes, not all the times, but sometimes, your indicators will lead price performance. They'll send you a signal. And we close below just slightly. Not so much that I would sell my shares. I would still rely more on the price action, but we closed on RSI below the lower band of support. Could mean nothing. It's just a signal, a clue, a warning. So we closed out last week trading below the 50-day moving average after this huge run up. So one could argue it's digesting these gains, and that's a fair statement. But I have a concern, and I'll get to that in a moment. But before I go pull back to our weekly chart where our concern lies, we want to take a look at the slow Stokes. What we might see here is another double bottom setup. As you saw back here, we may see another one set up here. So what you want to see is that this trend holds true and doesn't break down. This choppy action on Williams percentage R, I don't like. What do I like? I like when it goes clear up to the overbought level and hangs out there. I don't like when it bounces off the lows and can't even make it up above 20. That's a sign of weakness. And that could be caused by the fact that you're in a consolidation phase. Once again, a fair observation. However, we want to take note of it, and we want to make sure that if this stock breaks out and we think about buying it, that these issues are resolved, that we have a Williams percentage R that is rallying, breaking out, and that all of these oscillators are confirming that breakout along with volume. Volume is critical. If you're a member, you'll understand that. If you're not a member, you can't appreciate how much emphasis I put on volume. All right, now here's where the concerns lie. Weekly chart, once again, we want to pull out to a 30,000-foot view. So we rallied off of $2.33 up to this resistance level, and we broke through it. Now, what I call this is a breakout point failure. We rallied up to the second resistance level, and we failed. We couldn't break through it. And not only did we fail on this breakout point, we broke back down below the lower band of what should have been support, now is resistance. That I don't like. So what this tells us is that you have buyers back here, and possibly even further back in history looking to get made whole. Because look at the trauma that they've gone through. If they bought, let's say at the worst, $12.30 per share back here, it was as high as $27.75 when it consolidated here. And it pulled back all the way back to $2.33. Wouldn't you be happy after a couple of years of sitting with money that you thought was lost forever just to get your money back? So we want to pay attention to the psychology of the markets. So I wouldn't be a buyer of PEIX here. I would look to long PEIX on a close above this support level, and I would only nibble. I would just open up a position. So this is the story that the daily charts won't tell you, but the weekly charts will. Multi-period charting, folks, is very, very important to us at the Contrarian Trader. Next stock up is for a fellow member, Bruce. Alpha Natural Resources. Daily chart looks good. Once again, a high beta stock. These are the resource names, the coal names, the arch coals. They're out of favor, especially with the current administration in Washington. They hate the coal companies, which makes us like them because it makes them the ultimate contrarian play. So Bruce is the one that normally brings up these stocks, the coal companies, resource plays, and Alpha, we've traded in the past. We actually got stopped out of it, and thank God we utilized our stop loss point because it came back a good deal further than where we stopped out at. So we have a stock that had a breakout point failure. It consolidated. We watched it, broke out. We traded it, and it broke back down. Breakout point failure. Once again, this was the market telling us that it wasn't just the resource names. It was the entire market. You saw breakout point failures all over the place, and that is a sign of a market top. You needed to get defensive. That's what we did. Stopped out. First out, best out. And now what we're doing is we're putting in a W formation, a double bottom setup, as others might hear it termed. So we like the setup. We are beginning to break out, form the right side of that W. I don't like the fact that we had topping action on Friday. That is a concern. And that up volume decline. So what I need to see before I get long of this stock is possibly some consolidation. I need to see it continue to trade above its 50-day moving average. Perhaps if I got the itch, I wanted to open up a position before it started taking off, the shorts got squeezed, then I might just nibble on some shares, have some skin in the game, get rid of that itch, and then wait for it to rally and close above prior support, now resistance, up here at $4.50. When would I finish adding to my position? On a closing breakout above $5.08, and then you're going to have to deal with a lot of this overhead supply here. So I wouldn't get overly aggressive with this trade because you're going to have plenty of opportunities to buy the stock because you're going to have people just wanting to get made whole once again. That's the psychology of the market. So I would just nibble, watch it consolidate, and just keep lifting your stop loss order up as the stock begins to rally. Oscillators are looking pretty good. Weekly chart, 30,000 foot view. A good week last week. I believe we are at historic lows on Alpha Natural Resources. So we have a nice consolidation range here. If you wanted to get long looking at this chart, note how the weekly chart clears up everything for you. You know exactly where you put your stop loss order. If you bought on Monday, you put a stop loss in just under 412 because if it breaks down below 412, it's going a lot lower. And you always just want to nibble. You don't want to jump in with both feet. If your intention is to buy 1,000 shares, and I'm not just speaking to you, Bruce. Bruce, you know this story. I'm speaking about those traders that are new to the game. If you're looking to trade 1,000 shares, buy 1,000 shares of A&R, you're certainly not going to jump in on Monday morning and buy 1,000 shares. That's the clearest path to going broke in this business that you could possibly take. The stock has got to prove to you after this brutal, brutal beating that's taken that it has the capability, that there's demand out there for the shares that'll propel it higher. So what we want to do is we want to nibble, open up a small position. That way if you're wrong, and trust me, I've been doing this for 25 years, I am wrong at times. And I'm proud to say it. I'm honest enough. And if we can't be honest enough with ourselves to say that we're wrong, we're in the wrong game. Invest in mutual funds. So I'm digressing and I apologize, but I'm passionate about that point. You want to only open up a small opening position, and if it trades below 412, you want to get out. And that keeps your losses small. That's the name of the game. That's money management. The key to this game is keeping your capital reserves healthy. Preserve them. It's called dry gunpowder. You always want to keep your gunpowder dry. WetSeal. This is for Bruce again. All right, Bruce, daily chart, WetSeal. We're in a triangle formation. We are trying to break out. We're right at that upper band, so I would not be a buyer at this point in time. The obvious question is, when would I be a buyer? I would be a buyer on a pullback to the lower band of support, this range, because it's proven twice before to be a good support level. If it doesn't come back to that support level, that's fine. What we want to do is we want to see the stock close above this downtrend line. And ideally, it pulls back after a breakout, pulls back and retests the support level. The 3-day rule is put into effect. It trades above this support level 3 days in a row, and then we can begin to nibble on shares. Now, the one concern I do have is that you have up volume on a sequential basis declining. I don't like that. That is a concern. That tells me that there is not institutional demand yet. On a more positive note, daily chart, we're having a higher low put in. Note the higher lows being put in on RSI. And now you're having a double bottom setup above the support level. That bodes well. Slow Stokes appear to want to roll up, loop up. Weekly chart, WetSeal, the picture gets brighter, right? We know that there is real clear support down here. However, on a weekly basis, net, it didn't have a bullish week last week. So once again, we want to wait till the stock breaks out or pulls back and retests support. We don't need to sit here and say, I want to buy WetSeal. I don't know when to get in and kill ourselves. No, it's really quite simple. We want to sit back. We have the leisure of not being long of the stock and allowing the stock to prove itself to us. We're in no rush. There are plenty of other stocks out there to buy that are breaking out or breaking down if we're looking to short. So right now, the signs are that we are putting in a bottom. Last week was not a good week. However, we did close off the lows of the week. Now we want to see a pullback or a breakout, one of the two. VTMB, this is for fellow member Ron. This is our 2014 penny stock pick of the year, and we made a killing in the stock. You could search the website. I've done videos on our trade. We had a 750% profit on VTMB in January, and that already made our year. So we had a really, really good trade in this, and we traded it again for another, I believe, 70% profit. So what happened last week? These stocks are currently out of favor. When we traded it, they were in favor. And I mentioned this earlier when I discussed for Kate, WTER, that these stocks are out of favor. And you could see that we just pushed down, plunged below this support level, and we reversed, and now we were able to recapture it. So the question then becomes, of course, when do I want to buy it? You know what? Fairly bullish price action on Friday. I like the follow through off of Thursday's price action. If you wanted to nibble on it, I'm fine with that. But what I want to do is I would want to see, let's annotate this. Nothing like a good annotation. Women don't need annotations because they're able to do this in their minds. Men are more visual. So I'm giving credit to women being brighter than men. No offense, guys, but let's face it. They can read us like books. Okay. All right, so here you have it, Ron. Here's your upper band of the declining downtrend channel. I mentioned during one of the market wraps last week when we did the analysis on VTMB that we're possibly setting up for a cup with handle formation. I'm going to take a look at the weekly chart in a moment, and that'll be more well-defined if that is the case, and it does appear to be the case. So we can add now with a stop loss just below this 003 level. I would add on a breakout and a close above this resistance level, the upper band of the declining downtrend channel. Let's take a look at the weekly chart. All right, VTMB on a weekly basis, it just, once again, weekly charts matter, folks. They give you a second view, filter out the noise. It's critical. So, yeah, it's confirmed that we do have a cup with handle formation. Here's your cup. Here's your sloping handle. And here's your pivot point right here at, say, this 0.9 level. Now, what concerns me about VTMB is that although it rallied well off of the lows of the week last week, it was unable to close above its 50-period moving average, and it was unable to close above this resistance level. I need to see that happen, especially in light of the fact that the micro caps are out of favor. And I'm going to keep repeating that because it's critical. The micro caps are out of favor, therefore they need to show me that they can perform. And right now, this stock, although it closed at the lows of the week, it still needs to show me a little bit more that it can close above this resistance level, and then perhaps we'll revisit it. And we'll keep an eye on it, Ron. This is our 2014 penny stock of the year, and it's treated us well. I know you're watching, and several other members are watching it as well, so we'll keep an eye on it. Okay, American Axle. This is for fellow member Wayne. A good week last week, rose over 6% on very strong earnings. So it's got a good story right now. Earnings momentum is behind it. Now, what I don't like are the topping tails. These topping tails, shadows, wicks, whatever you want to call them, are not good signs. What I do like is the fact that we are at support. So we have a stock that was in a strong uptrend. That uptrend was broken, and here we've sat for most of 2014 as dead money. What I need to see from the stock is a breakout. If you wanted to nibble on it next week just to scratch that itch, get some skin in the game, sure, fine, go ahead, do it. You need to set that stop loss just below, I would say 16.99. Give yourself a little bit of room. And then I would be looking to add to my position on a breakout above these topping tails. And not only just a breakout, but a close on a weekly basis. Remember, this is a weekly chart. So if you're on a breakout on Monday afternoon using a weekly chart, you can't base your trade decision on that, because by Friday, it could flash a key reversal, and it could be lower on the week. So a lot can happen in a week when you're using a weekly chart. Always go by, at a bare maximum, use Thursday's view, and you really want to wait until how it appears to be closing on a Friday afternoon, then open up your trade then. You may not be getting in at the best price at times. However, the risk to reward is more in your favor because you're buying a confirmed breakout on a weekly chart. It's a powerful move. Slow Stokes looking really good, hooking up, looping up, good double bottom on Ultimate Oscillator. So my best guess is that we will see a stock, Axle, breaking out in a fairly short amount of time, because these oscillators are looking quite strong. They're breaking out. Higher lows on money flow, so you have some money drifting into the stock. How's our volume? Volume was really good last week. You've seen some good institutional demand over the past several months. So strong up volume. Weak volume has been diminishing. Down volume has been diminishing. That's exactly what you want to see when you're looking to open up a trade. Next stock up is for Henry. Henry likes KB Homes. KB Homes is looking pretty good. Rates are dropping. Bonds are rallying because of the fear trade, as was the XLU, and I'll get to that chart in a moment. And you could see that we have a good entry point on this stock. So it's a safe risk to reward entry point on this key reversal on Friday to open up a small position. When would I add? I would add on a breakout above and a close above 17. Then add on a breakout and a close above this pivot point above 2075. And this is one where we may be looking to get involved with, along with a couple of other stocks I'm going over right now, and we'll revisit them on the week ahead commentary, which is set to be released to members on Sunday. Next stock up is Dish Network. This is for fellow member Ezra. We've seen some volatility with this one, huh? Okay, so we were in a strong uptrend on a daily chart. We traded up to near the upper band of the rising uptrend channel, and it failed to even touch the upper band. So the market sent you a signal. It couldn't make it up to the top of the trading range. And back here at the $63 per share level, 63.04, the market sent you a signal. It had difficulty getting through that resistance level. So it pulled back, held strong. Buyers came in above the lower band, which is bullish, bid it back up, and once again, we had resistance. To me, that's a signal. Again, we can complain about all the high-frequency traders and we're getting screwed because we're the little guy. Listen, folks, if you're using charts, if you're doing proper analysis, the markets send you signal and you could profit handsomely in the markets. You need to show patience and discipline, know when to trade. I didn't trade all that much last week, but the trades that I did perform were profitable. So the markets send you signals. So if you pay attention to those signals, then you would have known that this topping action here was you know what, that's a warning flag on the track. And that when we were breaking through it, and we knew breakouts were failing across the board, across the market, that's a sign of the market top. And any breakout or any stock should be viewed with a sign of suspicion. And this spinning top right here in red should have been your next clue. Finally, this breakdown here, you should have said, I'm out. Get out. At a bare minimum, we're pulling back to the lower band. And we broke down below that lower band and quite lower than that. So now we've rallied back. We've captured that lower band of support. We're at the lower band of what was a trading range. We have to make the assumption that this trading range or this channel will again be our new trading channel. So if you wanted to open up a position, that's fine. But I would just keep my stop loss order just below this lower band and keep a close eye on this stock because you want to see continuation follow through. Good volume, that's institutional accumulation. Good double bottom setup on the Stokes. All right, so you have a clearly defined trading range. You want to trade it up to the upper band, or actually you want to really trade it up to 64. Keep a very, very close eye on it at that point in time because you want to make sure it's going to be able to get through 64.52. If it does, it'll go considerably higher up to the upper band. And then I would be looking to book some profits because the expectation is that the stock will then pull back as it has done time and again in the past and then look to re-enter down near the lower band. Next stock up is for fellow member Luke, SYMC, Symantec. I haven't watched this stock in a long, long time. All right, so here we are in a triangle formation. This is a pretty simple one to trade. We want to buy it on either a pullback to $19.99 or $20 per share, or on a breakout and a close above the upper band of the declining downtrend channel. This is the secondary. This is the primary. You're going to have a lot of buyers back here and back here and back here looking to get made whole, so it's not going to be a clear shot unless they come out with some great announcement squeezing the shorts. So expect that. The markets will give you opportunities to buy on pullbacks, so no need to go jumping in with both feet. Only accumulate your shares. And SYMC, no need to take a look at a weekly chart. The daily chart really tells us all we need to look at. The XLU, this is for fellow member Nick. All right, I've mentioned the XLU several times in the past months, and it's one of those indicators that we look at because I call it the canary in the coal mine for interest rates. And if the XLU is breaking down, the probability of rates rising is very, very good. So the fear trade was in full effect these past several weeks out of the news, out of the Ukraine, and those geopolitical events forced money into yielding investments, dividend yielding investments. The problem is that last week we broke down below the lower band of support. Now what we need to do is really take a look at the weekly chart to see whether or not our trend is broken. And I'm going to go over this really, what I'm going to do, Nick, is I'm going to go over this one more on tomorrow's commentary because I want to go over the 10-year yield, and it's more for members. So I'm going to go over this more in detail on the week ahead commentary. So just bear with me until then. Daily chart right now is saying to avoid it, and I'll leave it at that. So you'll have an answer by the end of the weekend on XLU, the full-blown analysis. Next stock up is for fellow member Rod. And I skipped one for Ron, which is Hero. So I'll get to that one, Ron. Just bear with me. I'm just going to get through these two for Rod. All right. These stocks are for fellow member Rod, GLD and AMD. Let's begin with the GLD. I'm only going to do the daily chart on this one, Rod. As with the XLU, I'm going to go over these on the weekend commentary in more detail because we have the U.S. dollar that's involved, and it's a far more involved analysis. So, and I want to use the weekly charts. So I'll touch upon it tomorrow. What we're seeing in the gold markets is a consolidation after a fierce pullback, and we are in a triangle formation. I like the chart. I would not be a buyer just yet. I'm keeping it as a watch at this point in time. The RSI is making higher highs, possible double bottom setup. It's still trading below 50, which is the neutral line. I don't like that. Volume was good on Friday. I do like the ultimate oscillator putting in higher lows, possible double bottom setup on Stoke RSI. So you could see where I'm going here, Rod, that I like the GLD. I'm a bit cautious, and I wanted to take a look at its correlation with the US dollar. I went over that earlier in the week on Market Wrap, one of the Market Wraps, and I want to revisit that, and I want to really take a look at the weekly charts as well, possibly the intraday charts. So we'll go over that tomorrow. All right, so right now I like it, but I have my caveats, and I'll go into more detail tomorrow. And let's move on to your next one, which is AMD. All right, let's begin with a weekly chart, a 30,000-foot view of AMD. And believe it or not, it's been in a stealth rally. Every time I think of AMD, and I've traded it before, and we've made money on AMD. But you always think of the stock in a decline, but in all actuality, it's been in an uptrend since late 2012. But the vast majority of that time, it's been in the consolidation phase, absorbing these gains and just dealing with all the resistance above. So I like the fact that it was able to recapture the prior support level last week and flashed a bottoming tail. That's a very bullish sign. So just using this chart right now, I would be interested in AMD to nibble on it. I think it's a buy. But again, as with all stocks, we don't want to jump in with both feet. We want to nibble because we know above there's going to be a test. And the test is always at the top of our trading range. And that's at $4.65. Can we close above that support level? If we close above that support level, and depending upon how the candlesticks look and the volume look, well then we're going to be looking to possibly build a serious position in AMD. Keeping in mind, of course, we still have a lot of overhead supply. So that's the weekly chart and the story on AMD. We like it. Okay, next stock up is for fellow member Ron. Sorry, Ron, I skipped over you on this one. I apologize. How could I do that for you? You've been with us so long, too. So my apologies. Okay, daily chart. This is really a powerful chart, and I'll tell you why. We had a really great consolidation phase here at, say, the 421 range. We broke out of this declining downtrend channel, and what really stands out to me is the fact that you've had so many reversal days here, bearish engulfing, a key reversal, bearish engulfing, and on Thursday you had a key reversal, and each one of those reversals was met with a bullish update the following day. So what that tells us is that there is demand for shares. People are buying. Yes, you still have some overhead supply. You're having some dumpers or longs looking to test the market to see if this is for real. And they're dumping shares, yet there's a buyer out there. So this stock is under accumulation right now. And what we're looking at is this $4.61 range. What we want to do is we want to watch and wait, see whether or not it closes above that level, and then you begin your nibbling process. I wouldn't do that due to the fact that you have so much volatility. So I wouldn't be a bit surprised on Monday seeing another reversal. So it's really got to get over whatever issues it's going through right now, which is obviously buyers back here looking to get made whole, and it needs to close back above that level. That shows that these guys are done, and then you should get a rally up to 450. Oscillators are looking really good. So I like Hero. And the weekly chart really bears out what the point I was trying to make. You want to look at net accumulation. The daily chart is too noisy. It's too volatile. You need to pull back. Weekly chart, 30,000-foot view of the markets. The daily chart is a 10,000-foot view. It's higher than an intraday chart, but it's still pretty noisy. The weekly charts are far more clearer. And you can see net buyers, they're out there. This stock is under clear accumulation. Good bottoming tails. Let's draw a trend line to get a visual. All right, now, this is the power of charting, folks. It's the power of using trend lines. You need your visuals out there because your visuals speak volumes. And what is a visual? A visual is your trend line. You can see that you have a firm downtrend line here. What did we do last week? We closed above it. for the first time in a long time. So that is a key event, a critical event, and we like it. So we like the volume action, we like the price action, we like the technicals, the fact that it was able to break out above resistance and close there, more importantly. Stokes are looking good. MACD went positive last week. For the first time in almost 18 months. So Hero looking good. And that's it, folks. If you have any questions, just leave a comment below on either my blog or on YouTube. If you're not currently an email subscriber, please enter your email address. Again, I hate spam too. You will not be spammed. And we have a 14-day free trial offer. Take advantage of it. And folks, have a great trading week. And members, stay tuned for the week ahead commentary, which is going to be coming out on Sunday. Folks, enjoy the remainder of your weekend. Have a profitable trading week. Talk to you soon.